Well, hi everybody, Brett Coombs from Munro Property Group. Just thought I'd do my market update a little bit early this month in July already, so we're halfway through. We've got the home stretch to Christmas, so I just thought I'd update on a few things that are happening in the real estate world at the moment. So there's a lot of press about Adelaide for a change. So we're kind of setting a bit of a trend, and they're talking about Adelaide property rebounding back from COVID a lot sooner than their interstate counterparts in Melbourne and Sydney especially. So property is predicted to rise, and also because our current government has focused on jobs for the last couple of years. All the commentators in the property investment space are sort of saying that Adelaide's kind of could be the place to be soon. So and that's certainly reflected in some figures. So Norwood at the moment, so if you've been watching my videos the last 3 or 4 months, Norwood growth rate's been for the year has been tracking on at about 7-8%, and the figures have just come out from RP Data, CoreLogic. So up until June, that Norwood growth rate is at 17.6% year on year, so from the year before. So that's a bit of a rise. Median price is just over $1 million now for Norwood. Days on market are about 42, so that's still probably a little bit higher than what we'd like, but it's still about where it's been the last 3 or 4 months. But the number of sales are down, the actual listings on the market are down 42%, so that's quite high. And that may, of course, have some reflection on why pricing is holding in Norwood. But if you look at McGill's up to 8%, Felixstowe up 15%, Campbelltown, so that took a bit of a dip. Lots of development policy hacked by the council there, but even Campbelltown the last month or so is tracking along at about 9%. North Adelaide, so North Adelaide's a bit of a standout, so that's about 3.7%, so that's kind of bouncing back a fair bit. Listings are down in North Adelaide by about 30%, and just looking at some of the sales, not only from us but from other agents in the area, those properties, so it seems to be those core family homes and stone fronted villas, all that sort of thing, are really doing quite well. Units have dipped a little bit, but the property management side of things for us has been quite strong. We need some listings. We've got obviously more tenants inquiries than we have property at the moment, so that's still way down. And Adelaide, Sydney CBD, it was reported in the Fin Review last Friday that it has 50,000 vacancies of rental property in the CBD at the moment. So whereas Adelaide, we're under 1%, so we're tracking the other way quite rapidly. So if you talk to somebody interstate at the moment, and you say Adelaide's vacancy is under 1%, some suburbs are 0.6, so they just look at you like, what's going on in Adelaide? So Adelaide's looking quite good. Something that I wanted to touch on at the moment, so we had a very busy May, and up until recently writing a contract a week, sometimes more. The builders grants had a bit of an effect on buyer activity, as you would expect, but financing is a real issue at the moment. So not only are they taking a long time to process loans where they can, so some of the banks have overseas processing in India, so that's probably almost shut down. But what we're finding is happening is that banks are, a week before settlement, asking for a last pay slip and asking for that last bank statement for the month, so, and then declining loans that they've already approved and signed up for. So we've had a buyer that's now leasing the place for 6 months off a vendor, so because he was pre-approved, signed mortgage docs, and we went to book in settlement, and the banks turned around and said no loan, and the reason being was he's changed his job so in the last week, and he's earning more money, but they've declined. So and some of the brokers are saying to me that banks are taking two months for approval. Standard in the real estate game, we're seeing we normally do 2 weeks for bank approval in a normal market. Now it's 2 months. So, and in fact, I'm turning around and saying to clients, look, I'm not accepting subject to finance unless you've got a pre-approval. And that pre-approval has to be subject to valuation. So a couple of tips that we're seeing from the various brokers and loans that are getting knocked back all of a sudden. So you really need to delete all minor transactions and have that done for a period of 3 months. So your Netflixes, your trips down the pub, the bottle shop takeaway, just get rid of all of it. Statement and have some savings history. We're also finding some clients where they've got an existing loan with a bank, they go in for a pre-approval, they decide to sell, they get the house ready, sell their property, go into the bank with a contract. No, we're not giving you a loan anymore. So just be a little bit careful. Don't think because you've got a relationship with your bank at the moment, you're automatically going to get finance. And it's probably a good time to shop for a new bank at the moment. So a couple of those non-bank lenders are really taking up the slack. Also, Bank SA is fairly aggressive at the moment as well. In some instances, they've still been a bit difficult to deal with, but overall they're pretty good. So don't automatically assume that you can trade up at the moment, or even trade down. If you need finance, you need to get that sorted pretty early. So as I said, get rid of all those incidental transactions, and also have a savings plan in place for 3 months. And when you've got an approval, don't change jobs, even if it's better, and don't have any new transactions. No Netflix, no subscriptions to the footy club, all that sort of stuff. You need to get rid of all of it. And we've had loans where they've been questioning $2.50 postage transaction from the football club, and it's a newsletter that gets sent to him. Well, you need to get rid of it. So banks are being tough, finance is taking longer. But overall, the market in Adelaide is quite strong. Often you read the news and they don't even mention Adelaide. So a lot of the time, the Australian doesn't mention Adelaide. Now they're starting to really focus on the SA market, and we're seeing some pretty good results. And I think probably spring will be an auction season. So just be prepared for that. A lot of vendors are a bit nervous about auction, but I think it with such low stock levels, it'll be a good season for auction, and that might be the traditional at the front of the house auction, or it may be online auction. So a lot of the buyers are really in tune to online auctions because of the transparency. They can see all the bids and they don't have to lob up on a Saturday morning at 10 o'clock to start bidding in the rain or anything like that. So online auctions are probably going to be really popular this spring, and I think auctions overall, I think it's probably going to be a good market, judging by the listings. So the amounts, Adelaide overall is down 42%. So on stock levels, so it's obviously going to be a good auction market, and there are buyers out there. So a lot of our buyers that we're seeing, they're very confident at the moment. They're not talking about discounting, they're just talking about doing a deal. And people that have got jobs and businesses that are doing really well, that they've probably done better through this virus period than probably they were last year. So I know there's a lot of pain out there with a lot of small businesses, but there's also a lot of people that have got some new jobs, and they seem to be higher end jobs too. So I don't mean to talk so fast, but it's a bit exciting at the moment. It's been a long time coming. Adelaide's been quiet, I think, for a couple of years, but I think there's some pretty good indications out there, and every day we're reading some good reports in the paper and RP data and CoreLogic. So if you want me to focus on a suburb, and if you want me to say, if you're looking for the next move, might be Magill or something, or anywhere that I don't normally cover, I'm pretty happy to shoot you an email with a suburb history report at the moment and recent sales, and you can do that on realestate.com, but often realestate.com is a little bit delayed. And also with low stock levels, there are also some pretty good properties that are selling off market at the moment, so they're not always reflected in realestate.com. And there's a lot of social media activity. So with all these virtual tours going through, we're kind of doing all those things first to our buyer database before we put it up onto the real estate portals. And we're finding that we're getting, we're talking to qualified buyers, and we can have that discussion about finance early and sort of say, look, we're not doing a subject to finance contract unless we see a pre-approval, and they don't get offended, and they've got it already anyway. So So quite often the off-market market is quite good for both buyer and seller. And we can really, I guess a lot of us are acting like the American buyer's agent, where we've got a client, we've got a buyer that we've been talking to for 6 months, and we have a pretty good relationship, and they trust us to recommend them a property, and that something that they like. So overall, pretty positive. I can't sort of say enough at the moment about Adelaide, and private inspections are good, so there's a lot of email activity over the weekend. Open inspection numbers, from my point of view, have been fairly quiet, but email inquiries and a lot of private inspections during the week. So I'm suited up today and had a shave, etc. So I don't even recognise myself on the camera here, but quite strong. And not all of it's this new builder grant thing either. So as I said, a lot of family homes, a lot of traditional homes through Norwood, McGill, Dulwich, all those areas are getting some good sales at the moment, and some good properties about to come on the market as well. I feel so. Just be prepared for most agents to be talking about auction, and be prepared that we might get a contract straight away, but that settlement process might take a bit longer. So. Just be prepared that your agent might have a bit of a discussion about that with you, and maybe a little bit more flexibility. And the last thing that we want to do is take a property off the market because it's under contract, then you have to bring it back onto the market too. So it kind of quells that momentum a little bit. So just be prepared that a little bit more flexibility. And if you are buying, trading up, or you need a loan for your next move, just go and see your broker, go see your bank, and as I said, clear that bank statement, because they're really honing in on those statements at the moment, and pay slips, etc. So, but also, I can't stress enough the rentals. So, we're getting some pretty good numbers through. We're leasing properties pretty quick. So if thinking about investment property, probably now's the time to have a chat to your accountant. And if they, to be honest, if they can't give you any advice on buying an investment property at the moment, then go see another accountant. And I guess the main focus for investors at the moment, and a lot of developers too, is land. So if you're buying a standard house or renovated property, you can get into might be better off doing that rather than a negative gearing type situation. But at the moment, everything's leased. We've got 4 or 5 properties that are a year old or not even 2 years old, and they're fully leased, and they've had stable tenants, and we've got stable rental income coming through. So we've got those off market as well, and you've got all sorts of depreciation levels because they're pretty new. So as I said, if you've got any questions or you want me to focus on a suburb in my next report, please drop me a line. But they're all tracking along pretty nicely at the moment, and throughout the Norwood Eastern Suburbs area. As I said, Norwood's up 17% on the year before. McGill's up 8%, Felixstowe 15%, Campbelltown 9%. And listing levels are down. So I think, as I said, a good time to put your property on the market at the moment, because there'll be a lot less stock than normal. So have a look at my YouTube channel. So we've got some videos on there, and if you've got any questions on putting your property on the market, and obviously it's a good time to get us in early, and we can focus on those areas that make a property sell without going overboard as well on renovations. And we've got lots of tradespeople. We've got people that renovate bathrooms, renovate kitchens, all on board, and we're chatting to every day. So as I said, take care, and I hope everybody's safe and well. And we've had a lot of bursts in Victoria and Sydney. We've closed the borders again, but overall, I think Adelaide's pretty resilient, and everybody's looking at Adelaide. We're a nice, safe, quiet place, and we all tend to behave ourselves as well. Hope everybody's well, and that's all from me for this month of July. I'll probably do another market update at the end of July too, so just to see how it's tracking. And we may even do a weekly thing on Instagram just to give some figures out there, and just let everybody know what the market's doing, because it's been lots of reporting from interstate and it's different to Adelaide. So I'll keep you all posted. And so as I said, yeah, take care, and any questions, feel free to contact us by email, brett@munroproperty.com.au, or my mobile 0421 323 699. Thanks, guys. Cheers.